Have you ever wondered why banks seem to be closing their doors even as they're posting record profits? It's a puzzling question, isn't it? We're in an era where banks, particularly in the United States, are pulling down the shutters on their physical branches, all the while raking in unprecedented profits. The banking industry has been on a roll, posting record-breaking profits year after year. But despite this financial success, the number of brick-and-mortar banks continues to dwindle. It's a paradox that leaves us scratching our heads. This trend might be partly explained by the shift towards digitalization. As online platforms become more prevalent, the need for physical branches seems to be diminishing. Banks are adapting to this change, moving their operations online to meet the evolving needs of their customers. It leaves us to ponder, is this a uniquely American phenomenon or a global trend? Let's turn our gaze from the domestic scene and look at the international stage. Are global banks also experiencing this paradox? Indeed, they are. Across the pond, the situation mirrors that of US banks. In Europe, for instance, Deutsche Bank and Barclays have been closing branches at an unprecedented rate, even as their profits soar. Down under in Australia, ANZ and Commonwealth Bank are following a similar path. They're closing physical outlets, while their balance sheets tell a story of record-breaking profits. This pattern is echoed in many developed nations around the world. The banking industry is undergoing a transformation not just within the United States, but globally. This shift is marked by a move away from brick-and-mortar branches, paralleled by an upswing in profitability. These trends are reshaping the banking landscape, underscoring the advent of a new era in banking. So, it appears that this is not an isolated event, but a global phenomenon. But what does it all mean? In the last few minutes, we've unraveled an intriguing paradox in the banking industry. We've seen how banks, both in the US and globally, are closing their physical branches at an unprecedented rate, even as they are posting record profits. These seemingly conflicting trends are actually part of the same story: the shift towards digital banking. Customers are increasingly managing their finances online, using apps and websites rather than visiting brick-and-mortar branches. This reduces operating costs for banks and allows them to serve more customers with fewer resources. The result, higher profits despite fewer physical locations. But it's not just an American phenomenon. We're seeing the same trend across the globe as banks in Europe, Asia, and beyond adapt to the digital age. It's a fascinating look at how technology is reshaping traditional industries. As we move forward, it will be interesting to see how this paradox evolves and what it means for the future of banking. Stay tuned for more insights into the world of finance. Before you go, subscribe, like, and click the notification bell. It is helpful with getting more content exposure. Thank you for being a part of the Goatwater Forum, and may your mind stay agile and adaptable.